Sudip Bandyopadhyay too joining in on the show right now. Sudip, hi, afternoon. Good to be speaking with you as always. How do you make sense of today? Because, even the rupee has bounced back today. The state election verdict was in favor of the ruling party. You got the rate cut as well coming in from the RBI. And earnings have not been all that bad. We will get to Sudip in just a bit. Seems like he's not getting my audio. But right now, of course, names like Aisher, Apollo Hospitals, all earnings reactions. L&T is down about 3%. You've got ITC, Kotak Bank, Tata Motors, Reliance down 1.5%. And yeah, the Nifty Bank as well is acutely under pressure. Even the likes of ICICI Bank and Axis haven't managed to withstand today's fall. Bharti as well has significantly cooled off from even the top of the day. Naresh, I recall your positive call on Bharti. What do you read on the charts now for Bharti?
So one of the few stocks only holding up in the markets currently. The stock is holding on to the breakout point, even when majority of the markets have corrected. So the bias remains positive till it holds up above the 1650 mark. So 1650 now becomes a stop loss for the stock, and slowly and steadily as the market recovers, the stock could be the first one to make a new all-time high.
So take coming in on Bharti Airtel, but today in the news flow, all these liquor companies were also in focus as Telangana government has decided to go ahead and increase the beer prices by 15%, though the industry ask was 30%. But in respect to that, stocks like United Breweries as well as United Spirits, these counters are in focus. But Kunal, a quick chart check by you that though these stocks are definitely in the red right now, almost at the day's lowest point, but given the correction, do you believe that this correction is expected to end anytime soon?
Yeah, for the brewery stocks, I would probably believe that Radico is the only one which is showing signs of strength. I think that's the stock which, even on an intraday basis, has seen a very sharp recovery. And on the daily charts, the stock is so far forming a bullish hammer kind of a formation. But most of the other stocks, whether it's United Breweries, United Spirits, etc., most of these stocks are actually showing signs of a further leg of correction. These stocks have been unable to recover, and we've seen that over the last few days when the markets have seen some intense sell-off, these stocks have actually come back and managed to break below their previous weekly swing lows. So I think that's a concern for many of these names. That's why I think one has to be a lot more specific.
All right, be specific when it comes to some of these liquor related space as and only Radico Khaitan on the charts is looking decently placed right now. But other than that, if we look at some of these PSU basket, or rather the PSE basket, that's down about 3% in trade right now. But Dhananjay, do you spot any opportunities right here, or will you stay away given the recent run up in the past couple of years and the valuations not being that supportive?
So I think, yes, I think we have been citing the valuation concerns over the past few months. And we think that if you look at the earnings growth trajectory, I think the average earnings, let's say for Nifty, is hovering around 4 to 5%. And with a valuation that you have around 20, 22 times or somewhere there, you are at a significantly high PEG compared to uh, PEG ratio compared to the S&P 500. S&P 500 results, if you look at it, it's been growing at something like 16 odd percent if you look at this quarter. And the positive surprises are much larger at 77%. Whereas in India, the negative surprises are more. So I think in that context, the relative overvaluation is still there. I think what will be important is to really look at what the earnings trajectory would look like going forward, and whether the margin pressure that we are seeing in the current quarter will sustain or not. I think a lot have been read from the budget, which is basically relating to the tax cut and also the interest rate cut the RBI has done. I think that has not really convinced the market about the momentum as yet. I guess the demand scenario looks to be weak, and as a result of that, companies are trying to conserve cost, both material cost and labor cost. I think it's kind of a sort of a little bit adverse operating leverage that corporates are generally facing in terms of sustenance of profitability. So I think what the market is trying to do is to really look at that along with the other aspects such as what's happening to rupee, um, what's happening to flows, etc. Those are actually having an overbearing impact. I would say that if you look at the overall performance, it does look like the small and mid cap has been facing a significant pressure alongside the other cyclical stocks as well, the sectors as well. So I think what will be pertinent to really look at is whether the domestic flows with respect to from the retail investors, whether that holds on as strongly or not. So I think that's a second leg of factor that we'll need to see in terms of sustenance of the market. I think that's broadly what we are looking at this juncture. It's still a sort of a conservative view in terms of where we see value. I think there can be some more correction before the deep value emerges.
Okay, Dhananjay, so great to have you on the show today. Thanks for your time. Sudip, hi, afternoon. What explains this kind of crash that one is seeing today? I mean, what's spooking the markets? Because, the markers seem to be indicating that there is stability today. Even the rupee is actually holding up. Straight from the budget to the RBI rate cut to earnings, all has been falling pretty much well in place.
Well, Aisha, these things have been definitely falling in place, but there are a lot of other things which is spooking the market. One is the global uncertainty. This entire new US administration's tariff war is kind of creating a whole lot of uncertainties, and you can't predict or model the reaction or model the way things are going. So uncertainty is something which the market hates, and pretty much that's the scenario where the markets are. And it's not only Indian market; the global markets are in that state as things stand today. On top of it, I think we have a situation where the valuations of Indian equities. I'm not talking about today's correction, but pre-today, even the valuation was rich vis-a-vis other markets in the neighborhood, as well as many markets other than US. And the other factor is we haven't done ourselves a favor by through the Q3 results. I think the results have been by and large disappointing. If you compare in particular with the valuation at which the stocks were, take the case of a Titan or not Titan, a Trent, or even an Apollo or a Asian Motors. They've declared a pretty decent set of numbers, but the valuation, if you compare the valuation at which they were quoting vis-a-vis the growth they have shown, and consider the backdrop, global backdrop, as well as the domestic backdrop, I think the market is feeling a little worried. And that's why we are seeing correction in some of these counters in spite of the results being good. FIIs have been selling, and they have been selling for a very long time. At some level, I believe, and we believe that HNIs and family offices have also joined the selling party. So a lot of selling is coming, and domestic institutions, while they have been buying, but I think the firepower will start depleting soon. So we have to be careful. Things can improve drastically and dramatically also, but as things stand today, situation doesn't look too promising.
The take on the markets, and what are the factors that are a bit concerning in the markets right now. But let's also put the spotlight on some of these metal counters as well, because though the tariff implications, what the reports are suggesting that India will not be impacted that much, but despite the weakness that we are seeing in the metal index as well, see, it's almost a 2% cut on the index front, but stocks like Tata Steel, Hindalco, they are not holding up well. And even Nalco, this was the stock that was in focus on the back of the earnings, and the management clearly said that going ahead, given more supply on the back of the tariff implications, the alumina prices can be taking a hit. And what you see, it's like a 4% decline on this particular counter, as the management is anticipating that the margins could be a bit under pressure. But with this, let's go across and also listen out to the guidance given by the management itself.
FY25, if we see our forecast of revenue somewhere around 16,000, it should be there around 15 to 16, somewhere around that. Depends again on the LME and alumina prices, because our capacities, whatever production we are doing, that is more 100%, more than 100% of the rated capacity, and the production level will be almost same as compared to the previous year, slightly better from that. So revenues will be like there. And in 26, if we see, 26, we are going to add in one more refinery one expansion of the refinery is there, which may come by maybe in between October or December of 25. So we will be adding around maybe 4 to 5 lakhs of alumina production from that refinery this year, and in the subsequent year, next year onwards, maybe 10 lakhs of further alumina production will start. So revenue may be added up maybe around 2 to 3,000 crores of rupees more revenue will be generated next year. It is very difficult to give the figures because it all depends on the LME prices and alumina prices, but still maybe 10 to 12% decrease in the margins we can expect.
Okay, that's the take coming in from the NALCO management. Just going to refresh my screen. Not like anything is going to change. We're still struggling pretty much. Redirected to that 23,000 mark, but definitely today is going to leave a very, very bad aftertaste. Even names which were sort of holding out, the likes of a Hindalco, for instance, a Britannia, or an Axis or a Kotak of late, they too have gotten, now turned the tide and seeing some red. ICICI Bank is down 1%, HDFC Bank is well lower 1%, and SBI is well lower by about 1%. Kunal, should the market see a recovery tomorrow or sometime this week? Should that be used for, of course, the momentum portfolios as a selling opportunity, or would you say buy the dip if we do get a chance like this any other day?
Yeah, I would go for the latter. I would probably believe that in case if there is any kind of a further correction or a continuation sell-off, then I think it should be a buy and dips for the indices, because we are at a point where the market breadth is falling a lot more aggressively as compared to the benchmark indices. That generally happens. And cases like, for example, today we saw the mid cap index and the small cap index down by 4%, where the benchmark indices are down just around 1% to 1.2% broadly. So that itself indicates the intensification of how the mid caps and small caps have behaved. And I believe in that context, any kind of a further sell-off should be taken as a good buying opportunity for select mid caps as well as few select large small cap names. In fact, even today, many of the large cap names have fallen by a couple of percentage points, 2-3% on an average. Whether it's the likes of Kotak Bank, Eicher Motors, etc., Bajaj Finance, Bajaj Twins. So I think in that aspect, this could be a good buying opportunity for many of these stocks.
All right, but amidst this market, when we look at some of these mid-cap IT names, case in point being Happiest Minds as well as First Source, in this market as well, these stocks are not just holding on to the shade of green, but is also at the day's highest point. Naresh, any of the stock that you like at this point in time, and anything special that you are spotting on the technical front?
So not really. The trend is still down. It's just a one-day move in Happiest Mind. It has been drifting lower, unlike the rest of the IT names. First Source also went through that huge move and is now consolidating, relatively better, just like the other IT names. But would wait it out. Should consolidate a lot more.
Right, that's the take on both of these names. But apart from that, it's CRISIL as well that is now holding on to the gains of 4%. Kunal, anything here? Because I know that we don't discuss this stock very much on the channel, but it's a 4% jump amidst this market.
Yeah, nothing much to read on the reason why the stock is up, because I think in the first half, half an hour first, 1 hour or so, the stock was down quite sharply. There was a fall from I think 5,100 towards 4,600 mark, and from there the stock has climbed back towards 5,300 levels. That could maybe be a zone of volatility. The last time when the stock had actually seen such kind of a price volume action, where it had recovered from the intraday lows and managed to close 4-5% on the higher side. Post that, we would actually seen the stock in the next 7 to 8 days going into a gradual corrective mode. So unless the stock breaks past about the 5,500 mark as a resistance, I would avoid this kind of a trade.
All right, that's a void coming in on CRISIL for now. But with this, it's just a few minutes left for the trading day to shut shop. And let's start taking the BTST ideas from both of our experts then. And Kunal, you go first. Tell us, what are you looking at right now?
So I'll go with one sell and one buy. So a sell is on Godrej Properties, the stock confirming a swing breakdown on the short-term charts, breaking below the 2050 levels on the short-term basis. So keeping 2050 as a stop loss, would look out for targets in the range of 1970. And the second is a buy on UPL. That's a chart which has been doing exceptionally well over the last few days. And now this correction of 25-30 points from the recent highs of 640, I think could probably present a good contra buying opportunity. So would suggest a buy with a target of 630 and stop us at 595.
Naresh, what about your BTST ideas?
So two sell ideas. First is the sell on Varun Beverages. VBL, the stock did a recovery after making a breakdown move and is now making fresh lows. So would expect continuation of the move. Stop loss at 522, target price of 500. Second is the sell on Persistent, which was an outperformer and is now showing a breakdown possibility. Stop loss at 5860, target price of 5720.
Those are the BTST ideas coming in from both of our experts. But Sudip, just a few minutes left for the markets to close. Anything interesting that you are spotting, and are you buying anything in this market sell-off?
My investors, particularly people who are interested in for the long term, I think it's a good opportunity to start accumulating. And focus should be on large cap stocks because these stocks are still, some of these stocks are definitely attractive at current price if you have a time horizon of 1 year plus. So in the entire BFSI space where the valuations are reasonable, I would say State Bank of India definitely does look good for a long term pick. You can look at the insurance space, and LIC does look good there. Both these stocks, if you look at the long-term potential and the way they are positioned, I think they are good buys. Amongst the other stocks, I think I do like cement, and Ultratech continues to remain my favorite, being the largest with 170 million ton capacity, and they are actively exploring increasing the capacity to 200 million tons. So again, Ultratech taking the opportunity of the correction is a good buy. And finally, I think Reliance continues to remain in my buying list. I think we are looking at a price of 1500 plus in Reliance. So these dips are a good opportunity to accumulate for the long term.
Great to have you on the show. Thanks as always for joining in with those highlights.